to be showing you how to trade a fair value gap. So what is a fair value gap? A fair value gap is when there is a inefficiency within price, meaning that it leaves a gap in between when price expands from one candle to the other. It leaves a gap in between and leaving an opportunity for when price reaches back into that gap. It will either expand lower or expand higher, just depending on if you're doing a bearish fair value gap or a bullish fair value gap. Now, with that being said, the fair value gap is a 3-candle setup. Untouched fair value gaps have the highest probability of performing and going in the direction that you want to. The more that it's tapped into, the less effective it becomes. And this is also great for continuation trades, aligning with also your other confluences and stuff like that when you take fair value gap trades. Now I'm going to show you guys exactly how to go about trading a actual fair value gap, and the first one that we're going to look at is actually going to be a bearish fair value gap. So let's go ahead and see what that looks like here. So I'm going to let price play, and let's wait for a bullish fair value gap or a bearish fair value gap to form. All right, and as you can see there, we have a bearish fair value gap that just formed. Like I said, it's a 3-candle setup. So you have the first candle, you have the third candle, which ended up creating the gap. As you can see, the gap is formed between the first candle's bottom wick and the last candle's top wick, and that creates the gap that we were discussing here, making it a bearish fair value gap. So from that point, we're going to go ahead and mark out this bearish fair value gap, just like this. And then we are going to wait for price to tap back into this fair value gap to then trigger us to take a trade. Price tapped into the fair value gap, going to the equilibrium of this candle right here, and then we saw a reaction coming down, and this would have been my trigger here to go ahead and take my trade. So how I would go about doing that, once I seen this reaction and see it coming out of here, I'd go set up my short position, set this up right here, go for a 1-to-1 or a 1-to-2 risk to reward. And then from right there, I would go ahead and take the trade. Just like that, TP is hit, and that is how you would go about taking a bearish fair value gap trade. Now let's go ahead and see what this looks like on the bullish side of things. Okay, so here is our next example for bullish. As you can see, price action on this day is bullish. We're creating higher highs and higher lows, and therefore this will be a good opportunity to take a continuation trade on a bullish fair value gap. So let's wait for one to form and see an opportunity for us to take longs. Right there, we had our first bullish fair value gap. So let's go ahead and mark that out. Change the color, and let's go ahead and wait for price to show a reaction out of this zone, and then go ahead and try to take a long position if it presents us with the opportunity to. All right, as you can see here, price ended up taking out this low and coming down to the equilibrium of this candle. So this would give me a good opportunity that, you know, price is one respecting this fair value gap, and that there could be an opportunity for me to take a long here. So if I wanted to do so, I would go ahead and set up my position here. I'll do a 1-to-2 risk to reward again. Just setting my stop loss at the low of this candle that made the fair value gap, and then going for a 1-to-2 risk to reward. And let's see how this plays out. TP is hit, and that is how you trade fair value gaps.